you've gone through multiple historic events. 2008, and
Yeah.
then because most of your business probably is in Houston, three historic floods, and then a pandemic. So that's a lot to take in and still be standing. I don't know. You're like Rocky Balboa. What would you say going through those events like and coming out and not just surviving but thriving? Like, how has that made you a better investor today?
Yeah, it's really good. Every time you get in the boxing ring and somebody knocks your lights out, you remember that, and you remember where that punch came from, how fast it came, and what it felt like when it hit you. And then you adapt and you realize I need to move out of the way if
Yeah,
that
yeah. I don't want
happens
that to happen
again.
again.
you know, and so that's what it's done for me. And I've realized, moving out of the way in real estate, it's about having cash. That's how you dodge a punch in real estate is you have cash on the sidelines. And when you can't collect rent because there's a rent moratorium or an eviction, um, you got to be able to pay the bills. And so that's one of the first things I've realized is that your front line against these things that come at you is having your deep pockets, having that money set aside, and not distributing that money to your business partners or to yourself, not going out and buying a Ferrari or whatever. And I have so many friends that do that. They get some cash in their account, they go buy a new car.
Yeah,
And
it's like having. I mean, a business is like an infant.
yeah,
I don't know if you have kids, but it's like an infant, and babies need to eat a lot very
yeah,
frequently. And relating it to business, it's like you're sucking all the milk. Like when you're sucking all the milk, like you can't do that. It's gonna really negatively impact the health of the baby. You can't do
yeah.
that with your business too. You can't be making those distributions to yourself because you want to go on lavish vacations and you've only wholesaled four houses and you want to grow this great big empire. Like it doesn't work that way.
Yeah, and you always have to, I took this from gosh, what's the guy that owns the Rockets and the all the
Yeah,
restaurants,
yeah. Fertita.
Fertitta. And he said, look, when I pencil out a deal, I always pencil out worst case scenario. And if I had to sum up my strategy, it's always been that, which would probably make sense if you've seen my views about the economy. I'm always looking for the worst case scenario. But if it works and if you can get by on the worst case scenario,
It's
then
all
you're
upside.
probably going to be fine.
Yeah,
Yeah.
everything else is upside.
Yeah. And that's kind of the way I live my life. Everything I do, I'm predicting the worst case scenario and I'm training up for that. And if that doesn't happen, well, then I'm leaps and bounds ahead of the next guy because I was prepared to show up and have everything break and I got backups. And that's just been my whole position towards business. And then the other part of it is, when that event comes that you maybe didn't expect, is just get to work and use common sense. If you got a bunch of floods, well, you got flood insurance. Go fix your houses, get them rehab, go talk to the tenants, go buy some more flood houses that are cheap. If they're on sale for 40 grand in a $120,000 neighborhood, go buy a bunch more of those. If you get sick of it and you got a house that's flooded more than once, sell it. And I've had to do that. I had a house that flooded in Harvey and never flooded again, kept it. I've got one house that floods every time but Harvey, sold it. You just common sense, I think, is the biggest thing. But back to the market shifting on you. The first time it shifted on me was 2008. I was a wholesaler. I had my own home and a car, and that was really the only thing I had. And this is back when there was fax machines, and so all of a sudden the subprime collapse happened. Everybody knew about it. Hard money lenders kind of closed up overnight. And I had probably 10 wholesale deals on the market, sending out emails, putting them on websites and stuff. And overnight, people stopped calling me. Before, you could throw anything out there and it would sell. You could make the numbers up and it would sell. Overnight, people stopped calling back. There was no activity. I had to extend my contracts with the sellers, explain to them what was going on. And then I just started calling people. Common sense. Start reaching out to people. Reached out to a realtor. He said, well, hey, maybe I can list some of these houses for sale. I don't think he understood that I didn't own them, that I was just wholesaling them. But regardless, he listed a few for me on the MLS. And I was out of town that weekend. And my roommate called me and was like, hey, the fax machine's out of paper. There's paper all over the floor. I don't know what's going on. It won't stop. I said, well, put more paper in and read me the paper on the floor. And he said, well, it says 1 to 4 residential contract.
And for anyone out there that, if you don't know what a fax machine is, it was this little box that kind of like an email, but instead of looking at it digitally, it actually printed the paper out for you.
That's right. That's right. And those were offers that were coming in on the fax machine, one after the next, after the next. So here's what happened. The local guys in town got scared, quit buying.
Mm-hmm.
The hedge funds were sitting like a sniper, waiting. They'd been waiting for years. They had a full clip. Their sight was teed in on the target, ready to go. And so as soon as I started putting properties on the market at a certain price per square foot and a certain zip code, that hit their little algorithm, and their agents came out of the woodwork.
Love it.
And this lady said, we'll buy all 3 of these. Do you have anything else? I said, yeah, I got like 8 more that I haven't listed. She said, send me the address and the price. And
I think that's what happened. And we were talking about 2018 and how the market fundamentals for rentals, it just really went out of whack. I think that's kind of what happened because of the flood events that Houston had. I mean, we had, I think 3 out of 4 years were historic events. And I think that brought, especially Harvey, brought in, there's so much outside money buying up these flood houses, whether they knew what was going on or not. I don't know. That was just my opinion on, or my observation on, it wasn't the only thing at play, but it definitely was a big catalyst.
It was a big catalyst. Yeah, it changed a lot. And I think that you got to be careful what neighborhood you buy in. If that neighborhood floods every year.
Oh, I bought some of them. That went to back to the hard money company. This one out, it was Arizona or New Mexico, some outfit. They weren't a hedge fund. It was some investor. You got way too much in front of the skis, and he had like 5 or 6. And this national hard money company reached out to me, and I knew them, and they're like, "Hey, look, here's our sheet. Let me know which ones you want, and we'll finance them all." I think I picked 3, and I wholesaled one, meaning I closed it, immediately sold it. I think another one I put on MLS and sold, and then another one I kept as a rental and got a huge payday after just renting it for 1 year. Yeah, those were good deals.